Ladies and gentlemen, good day and welcome to Emami Limited Q1FY 23 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Percy Pantaki from IIFL Securities Limited. Thank you and over to you, sir.
Hi, good evening everyone. Thank you for participating in this conference call for Emami's Q1FY 23 results. I have with me from the company Mr. Mohan Goenka, Director, Mr. Vivek Dheer, CEO International Business, Mr. Vinod Rao, President Sales, Mr. Gulraj Bhatia, President Healthcare Division, and Mr. Rajesh Sharma, President Finance and IR. I'll hand over the call to Mr. Mohan Goenka for his initial comments. Over to you, sir.
Thank you, Percy. Very good evening, friends. I welcome you all to this conference call on Emami's results for the first quarter of FY23. As you all are aware, the environment continues to remain challenging with the FMCG sector impacted by an unprecedented inflation, leading to subdued consumer sentiments and lower margins in this quarter. Despite the challenges, I am happy that we have reported a resilient performance and profitable growth in Q1 FY23. On a high base of 37% growth in the last quarter, our revenues at 778 crores have grown by 18% in this quarter. Our domestic sales grew by 13% on a high base of 42% with a volume growth of 8%. With our newly acquired brand Dermicool contributing around 8% to the domestic sales. International business grew strongly by 45% on a base of 17%. Our overall volume growth has been around 10% in this quarter. The quarter has been challenging for us where we have seen significant correction in two categories: pain management by 30% and healthcare range by 25%, led by immunity portfolio. This correction has been due to a very high base of a 70% growth in pain management range and 59% growth in healthcare range last year. However, despite such huge corrections, our diverse portfolio of products helped us to deliver a robust performance at an overall company level. This quarter, some of our leading brands like Navratna, Kesh King, Fair and Handsome, etc., as well as our international business helped not only recover the lost sales due to correction in pain management and healthcare range, but also helped to deliver an overall revenue growth of 10%, excluding Dermicool. Navratna range grew by 29%, Kesh King range grew by 20%, male grooming grew by 32%, and 7 oils in 1 grew by 45%. While Boro Plus range posted flat growth during this quarter. It grew by 6% on a 3-year CAGR basis. Pain management and healthcare range, despite corrections during the quarter, grew by 10% and 13% respectively on a 3-year CAGR basis. So if we exclude the pain management, healthcare range and the acquired brand Dermicool, our rest of the domestic portfolio grew strongly by 30% in value and 24% in volume terms. During the quarter, modern trade grew by 42% and e-com grew by 55%. In this quarter, the contributions of e-commerce channels increased to 7.6% and modern trade increased to 8.2% of the domestic revenues. CSD grew by 23% during the quarter. Our rural penetration continued to progress steadily with Project Khoj in line with our plans. Our international business, marked by a strong performance, especially by MENA and SAARC, witnessed 45% growth in sales during the quarter. All our major brands, 7 Oils in One, Navratna, Fair and Handsome, Kesh King and BoroPlus, performed well in the international markets. With a high base of previous year and an unprecedented inflationary pressure that impacted the consumer spends across urban and rural markets, we posted a resilient, profitable performance during the quarter. Our gross margins at 62.6% contracted by 340 basis points due to inflationary pressures, combined with unfavorable portfolio mix due to extraordinary high sales of pain management range last year. EBITDA at 173 crores grew by 2% and adjusted PAT at 138 crores was flat compared to last year. Recent corrections in crude prices and the forecast of a normal monsoon are encouraging. Fiscal measures taken by government also augurs well. We are optimistic of witnessing an upward curve in the consumer sentiments in the near future. As you are perhaps aware that today the Board of Directors, based on the recommendations of the Nomination and Remuneration Committee, appointed 5 new independent directors in view of completion of the full term of appointment of the other veteran independent directors, Mr. K. N. Emami, Mr. Y. P. Trivedi, Mr. P. K. Khetan, Mr. S. K. Ganguly, and Mr. Amit Kiran Dev. The new independent directors come from diverse professional backgrounds, each bringing to the board their rich industry experience and wide knowledge. Mr. Anand Rathi needs no introduction. He is one of the leading financial and investment experts and founder of Anand Rathi Group. Mr. Anjani Agarwal, former senior partner of EY for 26 years. Mr. Anjan Chatterjee, he is the founder of Specialty Group chains of restaurants. Mrs. Avni Davda, the founding CEO of Tata Starbucks, and she is presently working as advisor to Bain & Company. And Mr. Rajiv Khetan, senior partner of Khetan & Company. We are very excited to welcome the new members to our board who will bring much value to our organization with their rich experience and guidance. With this brief, I now open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks. First question is on Dermicool. So we have seen a very strong summer even in Q2 in UP, Bihar, Jharkhand and Bengal given the deficit. So could you talk about that? Do you see a good Q2 at least in these key states for Dermicool?
As of now, we are not expecting great numbers of Dermicool in this quarter. So this practically the sales becomes almost negligible. And prickly hit ka abhi there is no season honestly.
And this would also apply for your cooling hair oil or Q2?
No, cooling hair oil does not apply because two are very different products. So Navratna Cool Talc in general we are seeing an upsales in talc, but not so much for Dermicool.
Right. My second question is on Dermicool.
It's a specific prickly heat powder.
Right. My second question is on Dermicool. What are the key changes you have already done? Are you happy with the first quarter performance of around 53 crores?
So we haven't done any changes as of now, Abneesh, because we are just taking the product in our fold from 1st of August. Till now, it was still with them. Post transition, then whatever changes have to be done, we will do.
Right. My second and last question is on Q2 margins. Other companies are saying Q2 margins could remain under pressure only versus Q1, given rupee depreciation and lagged impact. What would be the sense in your portfolio? Do you see Q2 margins, the YOY pressure being lesser? I understand seasonality bit. So if you could tell us on YOY basis, will the Q2 pressure be lower?
In H2, we are seeing the pressure easing, Avnish, but Q2 still we are seeing the pressure would be there because the stocks that we have bought, the raw material, everything is at a high cost. So maybe Q2 would be a little pressure, but it would definitely ease in second half.
Okay, that's all from my side. Thanks.
Thank you. The next question is from the line of Prakash Kapadia from Anives Portfolio Managers Private Limited. Please go ahead.
Yeah. Thanks for the opportunity. On Dermicool, given that, it's a fairly summer season product, when do we expect, the brand to clock pre-COVID sales of around 110, 115 crores? In the PPT, you mentioned some initiatives, or it's too early once it comes under your fold in August, and then we'll have some more game plan and clarity?
Yeah. Hi, this is Vinod Rao here. So the Dermicool arrangement, I don't know if you know about it. It's been a distribution agreement with Reckitt. So their system continues to sell it this quarter, and the brand actually tapers off. So it just becomes close to zero sales in August. So what we will really see is the true benefit coming out when we start loading, which is the JFM and the April, May, June quarters. That's when we'll start realizing the true potential of that brand.
And on, the pain management and Zandu Healthcare, obviously the high base was, there last year, because I think last year, especially North had seen a lot of traction on, the balm portfolio. We had seen a lot of new customer additions. So, what's the game plan for, these two categories for the balance of 23? What initiatives are we taking to ensure, growth comes back? Because, if two of these power brands face this high base impact, it will be difficult for us to grow on a sustainable basis for the year.
Prakash ji, it's not that way. This quarter also you would have seen that despite of such a decline in these two categories, we have still managed to grow in other portfolios. So definitely due to COVID induced, those were absolutely due to the COVID this thing. Now we are seeing good traction in all the other categories. So there would be a challenge as far as this is concerned. Not that we are leaving it. We would still advertise. We are still going aggressive. But it is not possible to match the numbers of last year. And we haven't taken that in our targets also, honestly.
Okay.
So overall, we are still confident at the company level we will be able to grow at good single digit despite a very high basis of last year.
Okay. And lastly, for Rajesh, what kind of, amortization can we expect for Dermicool and Kesh King on a quarterly basis? Because I think Kesh King is now tapering off. Much of it is done. But on Dermicool and, this quarter also we've seen a amortization figures. If you could give some sense for the balance quarters of 23 and onwards.
Right. So this June quarter was the last quarter for Kesh King amortization. So going ahead, roughly 22 odd crores should be the amortization for Dermicool and the other brands which we have.
22 crores. Fine. Thank you.
Yeah.
I'll join back if I have.
Thank you. The next question is from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Yeah. Hi, Mohanji, Rajeshji. Thanks for the opportunity. I have 4 questions. Starting with international division. It is very astonishing to see the growth is very strong. Could you please elaborate what is driving this growth? I mean, if I look at the last 2-3 years, we've had Russia and Ukraine problem, which has just started. But before that, when we stretched, we had a distributed arrangement, which we have revived. So all those pain points is behind, and we can expect this kind of growth going forward.
Thank you. I'm Vivek this side. International business growth is fundamental growth is coming from almost every market on account of brand building activities stepped up. Also, some of the distribution issues which are facing in certain geographies, that is also behind us. But still, we are seeing certain type of issues which are macroeconomic in nature. So they still need to be sorted out. So despite the macroeconomic issues in Russia and Ukraine, we have been able to register a growth in Q1. The adjacent region of Uzbekistan was not good for us, which is going to be sorted in this month itself, most likely. And apart from that, we're still facing issues in Sri Lanka in terms of currency, and that should also be behind us in maybe a couple of months. Nepal is facing extreme tight liquidity situation. So we are also working on asking our distribution partners to expand their investments into the market, so that even that can be behind us. So most of the issues are team working, so that we continue to deliver a decent growth. Some of the growth which we are observing in this quarter is on account of a slightly lower base also of last year. It was a growth base, but not as big a base. So hence, these numbers of 45% type thing may not be there, but we will be decent double-digit growth in every quarter.
Vivek, that was very helpful. I have just one sub-question. In Bangladesh, we have taken a lot of steps in terms of distribution enhancement. So could you tell me how much was the growth in last 2-3 years and this year?
Bangladesh, we took distribution steps and also automation of the entire system and processes over there, so that now we have a last mile visibility. We have mapped close to 130,000 odd outlets in our SFA system. The daily productivity, that is also visible. So actions are being taken based on that. So last 2-3 years, we have been growing in double digits. Even this quarter has registered a decent growth, despite Ramadan and Eid, both Eids falling in this quarter. Despite that, growth has been visible. But I think the opportunity over there is far bigger than what we are registering the numbers as on date. We see bigger opportunities over there. And hence, I think management time and direction on Bangladesh, we are going to invest more in this particular area.
Yes, wonderful. Thank you. Mohanji, my second question is on rural. Last 2-3 quarters, we have been highlighting that there is a pain in rural segment. How this quarter or maybe going forward, any qualitative comments you would like to offer, whether the growth is improved or is still lagging?
Vinod here. So rural, we're seeing those headwinds, which is the economic headwinds and the slowdown that we're surely seeing that. But we've not stopped any of our initiatives that we've made. The investments that we're making in terms of all the expansion, that is going in full steam. We are well ahead of our plans on addition of towns, and all the productivity measures, we are hitting that. And if you really look at a company level with the BAMS basis, we are still growing in rural, which is faster than our wholesale, and we will continue to do that. So the net of portfolio without BAMS, without pain portfolio, our rural is actually growing at 21%. So it's doing well for us. We will continue to grow. The BAM basis will slightly ease out as we move in the forward quarters, and our investments will go up. And towards the second half, we have a further expansion where we will add close to another 10,000-11,000 towns. So we stand to get incremental out of this.
So just one follow-up here. You mentioned that 11,000 towns you will add. So what is the current coverage, the quarter which is gone by?
So we've added close to this quarter. We've added very minimal. So we the last quarter and the second half we've added close to 8,000. So we are actually building in repeat purchases in this quarter. So the bulk of the expansion for this financial year will be in the second half. And till last year, we were at 32,000 villages. We added 8,500 last year. We've reached 41,000 now. By the end of the year, we'll be close to 50,000 towns and villages.
Okay. Okay. Just, since you're there, let me make an attempt to ask, can you qualify saying last 2-3 quarters we have made a lot of investment under the Project Coach? So any quantitative data points you can offer in terms of distribution or in terms of quality, in terms of growth or something like that?
Sure. So growth, we're measuring growth in two ways. So we look at even total rural and therefore the coach project, which is the 13 states, what are the growth levels there? So we're delivering more than 1% growth than total rural in these coach towns. Two is from an expansion and a footprint, we've gone from 32,000 to now 41,000 towns and villages. Three, we are getting our repeat purchase. So what we also track is the frequency at which the towns are buying. We're getting more than 90% of the towns we've added are repeat purchase every month. And this is a monthly phenomenon. It's not like a YTD repeat purchase. And when we look at all of these parameters put together, plus the productivity of the people that we put in, we've added around 453 people on ground, which has taken our rural footprint manpower presence from close to 900 to almost now 1,300. And we're seeing high productivity levels. Our cost to serve is also in well below budget. So overall, we're very happy with the project and the progress we're making.
Okay. That's really helpful. My third question is on the healthcare business. What we have seen, the growth obviously on a high basis tapered off. But just wanted to understand the initiatives what we have taken in terms of the new product launches and in terms of penetration. I did have some discussion last time where we are trying to cover the front end with the doctor and the back end with the availability. So maybe if there is some update how this programs what you've run around, if you can share.
Yeah. So in healthcare, this is Gulraj here. Hi, how are you? So in healthcare, basically, as you know, we have two parts of the business. One is the FMCG stroke OTC part, and the other is the Medico part where we reach out to doctors. So regarding the doctor point you mentioned, I think our Medico business has done reasonably well. Despite the high base we had last year, we've done well because of the extra headcount we've added in terms of reaching out to more doctors, to both and to more retailers. And both in the branded ethical business and in the generics classical business, we are on course to deliver the numbers which we have projected for this year. Of course, in the generics business, there was pressure on the immunity range, but the ethical business has done very well for us compared to the last year. As far as OTC is concerned, basically we did, as I said, have a challenge on the immunity range even for OTC, but we have planned to add about 20% outlets and increase our rural footprint also by 20%. So we will see the results of that in the second half, given the initial seeding time it takes to build that infrastructure.
That's really helpful, Gulraj sir. My last question, Mohanji, on the Dermicool part. When we did the acquisition, we said that one quarter we will continue the distribution agreement with Ricket, and the season has panned out. I just wanted to understand two updates, sir. Whether you have already taken Dermicool pan-India because it is having a base of prickly head. So whether that is happened. On second, if you can say what are the initiatives we said, because in the call when we did the acquisition, you did mention that we are looking for a larger category. So maybe you can help me, what are the initiatives already taken or maybe will be taken in the future?
So Shirish, Dermicool was already a pan-India presence product even when it was with Reckitt. And as I mentioned that it is coming to our fold from 1st of August. Now the season has gone. That's why we did not take it in the peak season. We did not want to do the transition in the peak season. So we are doing it in off-season. Now the season comes only in the month of February, March. Before that, whatever steps need to be taken, we will take those steps. As far as new extensions or brands or products are concerned, that we are working upon it. It will take a while for us to launch some of the categories under Dermicool. But the entire distribution will come under our fold from 1st of August.
So that will, Mohanji, include the manufacturing in-house, or we'll have third party?
Yeah, third party. Anyway, it was manufactured by third party, and we will continue with that.
Sure. Thank you, Mohanji. Thanks for the opportunity, and all the best to you.
Yeah, thank you.
Thank you. The next question is from the line of Gaurav Jogani from Axis Capital. Please go ahead.
Thank you for the opportunity, sir. And sir, one question is with regards to, the Dermicool business acquisition. So, sir, how much of that impact have we seen in terms of the gross margin here? Given that the gross margin profile there was around 55-50% odd, and our overall company margins are north of 60%. So, how much of impact is due to Dermicool?
So, Gaurav, Dermicool contribute to roughly 8% of our revenues. So, that is not significant. The impact on gross margins came because of adverse mix was primarily on account of pain management portfolio, which Mohanji discussed earlier, that pain management grew significantly in the base quarter last year, and we saw correction this year. So,
but sir, is the assumption right that the margins there is a 55 odd percent for Dermicool?
Yeah, Dermicool has slightly lower gross margins, right?
Okay. And sir, with this related question to Dermicool again, I mean, what would be the contribution of Q1 and Q4 to the annual Dermicool? Sorry, sir, yes.
Yeah, so as Rajesh said, almost 1.5% difference came due to the mix, not just because of the price increase. Last year, higher margin products, whether it was immunity or pain management, sales were very, very high, which has much higher margins than even 67-68%. Okay?
Right.
So almost 1.5%, the 3.5% जो आप देख रहे हैं ना gross margin कम हुआ है.
Right.
It is primarily 1.5% is due to the mix.
Sure. So the 3.5 में से 1.5 mix हो गया. I think the remaining would be around 0.5% or 1% would be due to Dermicool.
No, not so much.
Lower margin.
No, not so much. Much less.
Okay. So the rest would be like RM inflation. I think.
Yeah. Mostly it is RM inflation.
Okay. Got it, sir. And sir, with regards to Dermicool only, like the annual sale, how much would be the contribution in Q1 and Q4 for Dermicool in that sense?
It will be close to 75%.
In these 2 months. In these 2 quarters.
So if you look at it versus the pre-COVID basis, it will be ballpark 75% off.
Sorry, sir, I didn't get here. I mean, when you say 75% recovery, you mean of the pre-COVID level?
No. So you're saying Q1 and Q4 combined would be what percentage of
annual sales? Yeah.
No, then it'll be 90 plus because your Q2 is hardly nothing, so it will be 90+%. Q2, Q3, in fact Q3 is 0. Q2 is 10%. Yeah, it's around 90% plus. Yes.
Sure, and the recovery is 75% is what you meant for the versus pre-COVID levels, right?
No, I got that wrong. In fact, I thought I was referring to versus pre-COVID levels. We will be roughly at 75-80% levels. Yes.
Okay. And so just one last thing, sir, on the tax rate bit. I mean, we again this quarter had received some MAT credit entitlement. So now how much of this is, less, and what should be the tax rate percentage that we should assume going ahead?
Gaurav, we would, since last quarter, March quarter, we have started accounting for MAT credit, and there would be MAT credits in the remaining quarters also. So difficult to give an exact average tax percentage for me, but it should be roughly, I would say, around 18% kind of tax should be there. Not more than 18%. Looks like that.
18% if I account for the MAT credit entitlement as well, right?
Right.
Okay, sir. Thank you, and that's all from me, sir.
Thank you.
Thank you. The next question is from the line of Harit Kapoor from Investec Capital Services India. Please go ahead.
Yeah, hi, good evening. So just had a few questions. One was
on the base effects in pain management and healthcare, if you just do the math, basis of 3-year CAGR and apply to the maybe Q2 also, the decline on a YOY basis in Q2 would look much lower, maybe close to about 5-6% for the pain management business and maybe 15% odd for the healthcare business. Is that the right way to kind of look at it, or am I missing something?
No, Harit, in Q1 last year, we had seen a significant, in fact, extraordinary growth for pain management as well as healthcare because of the COVID impact. So from Q2 onwards, we don't have that significantly higher base.
Right. So it'll be much lower, right? I'm listening to pain management.
So compared to Q1, it will be much lower, but still Q2 was relatively good, I would say. We had a decent base for pain management and healthcare in Q2, but compared to Q1, it will be lower.
Got it.
From H2, it normalized last year.
Got it. The second question was on the two questions on rural actually. The first one was on the packs that you have, or the new launches that you have done in certain in certain brands. So 20 rupee bridge pack in Navratna, a 30 ml bridge pack in Kesh King, 30 gram shelf-ready pack for Seven Hansen. Is that kind of to leverage the kind of distribution expansion that you are doing in rural and hence trying to improve the throughput? I just want to understand your thought process behind it. Or is it that you're seeing that the market is rural is slow and small towns are slow, so you just want to kind of drive growth with smaller packs?
So the bridge pack truly will have a role both to play even in urban as well as rural. See, rural are LUP, which is a sachet. We sell significant quantities. So we have a healthy mix between the base pack, large pack, as well as sachet, or roughly around 35% is our LUP. So we would want to. So what we're trying to do also is leverage some of these bridge packs to actually bring down certain contributions of our LUP in rural. It just gives us a bit more profitable mix even in rural, and roughly it's actually the sweet spot in terms of a put down price suits both the SECCD customers in urban as well as the rural customers.
Got it. Very clear. On the rural side only, I also wanted to understand, we have seen the slowish kind of demand trend, but as we are exiting June quarter or early July, is there anything to suggest that there is some better pickup or improvement from a demand trend perspective? This is X of what you guys are doing in the market.
Not really. We're not seeing anything, say, whether it's July or even probably end of June, we're not seeing that uptick. I think a lot of our growth is also led by a few 1 or 2% is on the entire coach project. So that's helping us probably deliver a better rural performance than we would have than what the market scenario is today.
Got it. And the last thing was on Navratna. So you had a good season, of course, but if I would apply the same 3-year CAGR logic to Navratna, it still seems like there is a little bit of a decline there. Just wanted to get your sense, that what's happening. Is it again a rural demand issue or anything else, or if you could deconstruct maybe talc versus cooling oil, or just some more color there, please.
So you are right, Harit. On a 3-year basis, Navratna is still on a decline, and that is primarily because last 2 seasons, it was at a steep decline, unfortunately. Right. So hopefully, if the trend continues the way we have grown in this quarter, if it continues, and we are seeing growth in Navratna even in the month of July. So if it continues, then maybe in 1 or 2 years we will be able to make it up.
Got it. And last thing, if I may, was on the hair oil part. So also Kesh King has recovered smartly. I think 3-year CAGR is also at about 7-8% as per my calculation. 7-in-1 continues to do very, very well. I just wanted to get your sense on whether this growth in both these businesses is more distribution-led, it's more of your, or is it more kind of, just generally even in the same store, market share-led? I mean, could you just give a sense on that?
No, so it is, see, in Kesh King, we have taken a lot of initiatives, particularly in the shampoo front. As in my opening remark also I said, we are putting a lot of effort on sachets. And there are other initiatives also. So it is not just distribution-led. It is an overall, thrust on the brand. The larger point is what we know that everyone is pointing out is that despite of so much challenges, we are investing on all fronts, whether in healthcare distribution or in consumer care distribution, and same is in Bangladesh and other international markets. The results, unfortunately, we have not seen today because of the market conditions, but I am very, very optimistic. Once the scenario improves, we would see significant benefits coming in.
One data point, Modi, how large is shampoo now in the overall Kesh King portfolio?
Shampoo is almost, how much percentage? 25% is shampoo in Kesh King.
Got it. That was my last question. Thank you.
Okay.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi, Manju. Thanks for the opportunity. Couple of questions. First, on if I see our modern trade and e-commerce agency, even sequentially and YOY both, there is a decent improvement. In fact, in FY20 we were at somewhere around 12.8%, and if I do the math, then somewhere we are now at 15% plus. So, just wanted to know, is there any specific effort that we are putting on this side, A, and B, last year same time we are very bullish on Zanducare.com. So what percentage of our online saliency is coming from Zanducare, and then any thoughts on Zanducare's expansion as well?
Yeah. Hi, Vinod here. I'll just address the MT and e-com part. So yes, you're right. We are making significant investments on modern trade. So we've done two things. One is we've added a lot of the standalone stores. So our earlier presence was slightly muted. We've added now we are covering close to 6,000 stores, which are standalone modern stores. And these are growing at a significant higher rate. We're growing at almost 80% levels. We've also done significant investment in stores in the large hyper. And we are under a project called Midas, where we're looking at the entire visibility initiatives in store, and that is giving us good growth points, and they're significantly higher growth rates than total modern trade. So these 2-3 initiatives is really helping the modern trade growth, where we are investing behind promoters and in-store visibility. On e-com also, a lot of our large packs, as a trend, we are seeing e-com specific SKU and portfolio growing at a much faster rate, and with helping driving e-com growth. So we began e-com so we continue to grow at almost 80% on the base e-com, and that's delivering good growth for us. We've invested in the team, we've strengthened the team, we've almost doubled our team from what we began in the first quarter of last year, and that's helping us, and we're doing critical account management listed in most of the accounts, and that's helping driving growth. I'll just give it to Gulraj to address the Zanducare part.
Hi. So regarding Zanducare, basically, I think in the last 3-4 months, there has been the same, I think, high base of last year, similar to what we've seen in healthcare and pain management, given the fact that we did particularly well in the pandemic period last year. But we've taken on pretty aggressive growth for this year, especially in the second half of the year, which will be led definitely by a number of new launches we are doing of digital first brands. So along with the existing base brands and the new digital first brands we are launching, many of which will be new to the market, new to the industry, led by strong R&D development. We do see a strong, growth potential for Zanducare, given the fact that many consumers are now moving to buying online, etc. And we are addressing the millennials, the digital natives. So we do foresee strong performance coming. And of course, on a small base, related to the overall business will be smaller. But we are obviously investing for the future, not necessarily for this year, but for the next many years to come.
Thanks for very detailed answer. Just one follow-up on that. So are there any of our brands which are actually clocking that better market share in any of these channels versus, let's say, GT or the traditional ones?
I think across our portfolio, if you look at the respiratory, if you look at immunity, if you look at digestives and other segments such as sexual wellness, from whatever we know of, obviously there is no industry tracking which happens like Nielsen, but whatever we've been able to understand from our comparator companies in the market, we seem to have better in terms of growth. If you see both the last couple of years and even in this quarter, our relative performance has been better than theirs. So we have grown market share in most of the segments we are present in.
Yeah, that's it. And the last one for Mohanji. Mohanji, you have shared the details of the new board members, and visibly the new board has a good mix of experience and energy. But just curious to know, is this a routine rotation, or we actually wanted to use this opportunity to bridge certain specific talent or experience gap in our portfolio, or in our board members, in terms of what they bring to the table in terms of the think tank that we have?
No, so of course the 5 directors, they had completed their term. Okay, so we had to appoint 5 new directors. It was a good opportunity. I think we have got a very good mix of, experienced directors now. I'm sure they would add a lot of value.
Sure. That's all from my side. Thanks. All the best.
Thank you. The next question is from the line of Vishal Gutka from Phillip Capital. Please go ahead.
Yeah. Hi. Most of my questions are answered, but one more question here on the bridge packs. If you can just highlight how bridge packs or what do you call for Navratna, Kesh King and Ransom has helped the growth in this quarter. And for Kesh King specifically, 49 rupee bridge pack we launched. So in that, are you providing an applicator as well? Because then how the margins will look, because if you have to provide the cost of applicator and the bottle. Just want to understand on that.
The bridge pack, so we've not gone full hog on the bridge packs, but they're contributing significantly. We just about launched it. We were testing waters in some sense, but they're contributing significantly, around 2-3% as of today. But what we're seeing is the market acceptance was phenomenal, and we've seen us gain actually distribution. We've almost reached 60-70% of the core brand distribution because of these bridge packs. And what we'll continue to do is then keep investing behind this, and looking at this, we will be also looking at other brands of ours where we could launch bridge packs, because this just helps arrest any consumers moving out of category, and if there's any downtrading that is happening, that stays within our category.
Okay. And for Kesh King, if you can comment upon?
Sorry, what is the question on Kesh King?
Yeah. So because Kesh King has to provide the applicator as well, right? For 49 rupees bridge pack. So how the margins will look? It will be margin dilutive in that case, or how it will look on that in that sense?
No, the margins are it's not margin dilutive at all. And but the margins are not at all dilutive on this pack.
Okay. Thanks.
Thank you. The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks. Few follow-on questions. So, first is the structural question. I remember saying that Emami wants to reduce the seasonality which is there in your businesses. Now, if I see Dermicool, it in fact increases the seasonality because Q1, Q4 will be higher index, while Q2, Q3 almost negligible. So, will you now proactively try to address again the increase in seasonality, or it is now much larger business, so it is okay?
No, Abneesh, if it is addressed on its own, it is fine. We don't have a deliberate plan to address it. Okay, because brand building or brand buying is not in our control. If we like something or if it fits within our overall scheme of things, we will keep on acquiring those products, even if it is seasonal.
Right. Second is on immunity. Because of COVID, Chyawanprash, etc., saw a huge increase in penetration. But Indians are extremely focused on current scheme. So the new customers who got added because of higher penetration, any sense, Mohanji, you have that they will remain, because clearly all companies are saying that now sales have completely come off. This is not peak season. But how do you retain the new customers who have come? I understand the penetration had increased sharply.
Kulraj here. So you are right that, ideally a certain number of customers should have been retained, but what we are seeing of the category and the industry as a whole, across all the immunity categories, the levels seem to have gone back to the pre-COVID levels. If anything, there seems to be even more pressure there. While we don't have research data to prove it, but at the same time, we do believe that in certain segments, there will be a certain retention which is higher than what it was earlier. But currently, what we are seeing for the industry as a whole, we are not seeing any uptake compared to what it was to pre-COVID levels. The reason could be that many people would have bought these products in last year in October, December, and they are carrying stocks. So right now, people have gone to the other extreme where they're not really the drop is far higher than what one would have thought it is. Now, we don't have data across segments on how many are the existing versus new customers at this point. It's very difficult to assess that.
And one question on bridge pack. So one is 20 rupee. I was a bit surprised on that pricing, because normally bridge pack is something, say 13 rupee or 17 rupee, something like that. So my question is, are you giving more value to customer on more grammage for that? So why will customer shift from the NUP to the 20 rupee pack?
On which pack were you saying? Which pack specifically?
The example you have given in the presentation was 20 rupees. Yeah, bridge pack. Yes.
Right. So we have, in fact, across our portfolio, we do have a wide range. So whether it's sachet, so we also have a 50 rupee pack, we'll have a 50 ml pack, we have across the brands. So the bridge pack actually is playing between the smallest pack, which is in bottles for each of these brands, and the sachet. So you're right, we don't see complete switch. You won't see the switch between a sachet user who's also an infrequent user in that sense to a bridge pack. But what we're trying to do is look at driving the salience of these packs, which will build profitability for us for those channels as well.
So essentially, grammage you are not really offering more to the customer on the versus sachet. Will that be correct?
No. In a cost point of view, in a price per ml, no. But grammage definitely is. In a per ml, yeah.
Yeah. And last question is on quick commerce. Any data you can share? How relevant is it for your category? And have you tied up with all the key players?
In e-commerce?
No, quick commerce. 10, 20 minutes, 30 minutes delivery. Quick commerce.
Yeah. So we are present on all these platforms.
But how is the exposure? As in any number you can put? How much of sales is coming from quick commerce?
But it's very less. So because they also operate with a very limited portfolio, and they largely follow a very essential purchase kind of a model. They're also reinventing the models as channels, and they're trying to look at delivery times which are slightly longer, which actually brings in a bit more planned purchase. So we have a very limited SKU presence in these channels, and which is participating in that. The numbers are small today. Yeah.
So thanks. That's all for me.
Thank you. The next question is from the line of Kaustubh Pawaskar from Q1FY BNP Paribas. Please go ahead.
Thanks for giving me the opportunity. So I just want to understand that how much was the raw material inflation for this quarter, and whether we have taken any price increase in this quarter.
So we have taken roughly 4.5% kind of a price increase, blended price increase across the portfolio. and the inflation has also been very significant, and as a result of which our gross margins are impacted. So two primary reasons, as we discussed earlier, for our gross margins getting impacted. One is the high inflation, and second is the mix impact, because last year in the base quarter we had high margin categories getting sold.
So 4-5% price increase was taken into this quarter, or
no, blended average that is
price increase. Okay.
Yeah.
And going ahead, are there any plans to increase the price considering the inflation? Because as you said that you have an inventory of high cost raw material, for another quarter or two. So are we looking at taking further price hike in portfolio, or like there won't be any significant price increase?
So we expect our average price increase in the range of 4 to 4.5% for the full financial year as well.
Okay.
With similar kind of a price increase impact.
Sure. Thanks.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1. The next question is from the line of Shirish Pardeshi from Centrum Booking. Please go ahead.
Yeah, thanks for the opportunity again. Mohan, I've got two sub-questions on the margin front. Last time you have guided that there will be a decline in gross margin because of the raw material and investment in the ad spend. So I'm not asking for the next quarter, but how one should look at FY23. How much ad spend do you think you would do? Will it be in the range of 18 to 20% of net sales, or it will go up? And second, as Rajesh ji has mentioned that there will be mix change which is not helped in this quarter. But do you feel confident that second half your mix change will not require to take that kind of aggressive price increases?
Yeah, Shirish, on a yearly basis, I don't think we should have an impact more than 2% as far as gross margin is concerned. Okay. And we would, and A and B, we would try to be almost in the range of about 17 to 18%, not more than that. That is what we have planned. And sorry, what was your last question, Shirish?
No, I'm saying, so you said that 200 basis point improve,
right.
The decline in gross margin will happen. But I was more keen on if you have any plans, because you mentioned that Dermicool will come in Q4. So is that the ad spend you will be able to manage within that range?
Yeah, we would be able to manage in 17 to 18%.
Okay, that's it from me. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you, Basi. Thank you, IFL, and thank you all the participants for joining us for our Q1 FY23 results con call. Thank you.
Thank you, everyone.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.